Okay, now crypto exchange Kraken now is in talks with pre-IPO fundraising. They're still raising money before it goes public, but they're looking into having an IPO right now. Now, one thing I want to tell you before I start on this, I'm not giving you investment advice on this. And also, when you go in any type of equities, I don't care how big the company is, it can go bankrupt. So you need to get with your financial advisor and really discuss this before you make decisions on any type of equity investing. Now, one of the things I'm going to be talking to you today about is should you or is it really good to invest before a stock goes public? Okay, I'm going to tell you in a lot of cases, if you're entering the latter part of stages of a stock going public before it goes public, but in the latter stages, in a lot of cases, you're going to find out that you would have been a lot better off if you just waited until it went public and go out at least 6 months to a year and a half. And I'm going to give you some examples of that here in a minute. So people, because I've heard so many people, talk about people that got in to Kraken and bought the stock before it, before it's going public because they've had some rounds of raising money for it. But you could end up getting stung by this, okay? And you might think these people are going to make more money than when it goes public. It could be the opposite. I'm going to give you some big examples of Facebook, Coinbase, just to give you some examples of what happened. So if you're thinking about doing this, and by the way, too, again, I'm not giving you investment advice. I was in that type business for many years, but I'm not giving you investment advice here. Again, you need to talk with your investment counselor before you make any moves on this. But anyway, crypto exchange Kraken is in talks for pre-IPO fundraising round. And this came out in Bloomberg, and Kraken, one of the oldest crypto exchanges, is considering raising a final funding round ahead of a possible initial public offering, which is an IPO, after receiving inquiries from potential investors during the current digital asset market rally, according to people familiar with the matter. Now, the exchange would likely seek to raise more than $100 million. One of the people said, and they wanted to say here that with cryptocurrencies on the verge of all-time highs again and a perceived shift in a U.S. regulatory pushback against digital assets, companies in the sector are receiving renewed interest from investors and reviving talks of going public. Now, Robinhood Markets, Inc. said on Thursday it will acquire the crypto exchange Bitstamp, Ltd., and Kraken has talked about doing an initial public offering since at least 2021. Now, Kraken would likely raise the money in a so-called pre-IPO round, two of the people said, and they didn't want to discuss who they were with Kraken. But anyway, the fundraising may be completed by year end, according to one of the people. Kraken, whose parent company is Payward, was founded in San Francisco in 2011. And they went on to say that we're always exploring strategic paths towards Kraken's mission, accelerating the global adoption of crypto. Now, Kraken said in a statement, while declining to comment specifically on fundraising or an IPO, that they remain fully focused on investing in this goal. Now, Kraken's looking for a marquee company to join its board and to help it have a successful IPO as soon as next year. Now, so far, the talks have only involved verbal exchanges of terms and valuations, but not normal documentation, one of the people we're talking about here. Now, while Kraken has talked about going public for several years, it has been thwarted by the previous downturn in crypto prices, as well as butting heads with the U.S. Securities and Exchange Commission. And this is something you need to consider because Kraken's under investigation right now, and that can have a big effect on how a company does. I mean, it can literally make a company go bankrupt. So you need to look at that real carefully. That's why a lot of cases it's sometimes better to wait. But now Kraken settled one case with the SEC last year, but it's still going through the courts on another in which the agency accused Kraken of operating an unregistered securities broker-dealer, clearing agency and exchange, charges similar to those it filed against Coinbase Global Inc., the largest crypto exchange. Kraken has disputed these allegations. Now, in recent months, U.S. regulators and politicians have appeared to view crypto more favorably. In January, the SEC approved exchange-traded funds investing directly into Bitcoin, and in May made a step towards approving similar funds invested in Ether. Now, crypto has also become more of a political issue, with even presidential candidates jockeying to be seen as crypto-friendly. Now, with crypto prices rallying, KRAKEN is expected to have $1 billion to $2 billion in revenue this year. And Coinbase went public through a direct listing 2021, is forecast to have revenue of $5.9 billion, according to analyst estimates compiled by Bloomberg. Now, I'm going to give you a scenario with if KRAKEN goes through the same thing that Coinbase went through, and also Facebook, okay? Now, Facebook obviously is not a crypto exchange, but I'm giving you examples of companies that went public and what happened. And a lot of these people wish they had bought after the company went public. And I'm going to show you why here. Here's some examples. I'm going to show you just 2 charts. And this can save you, literally, depending on how much you invest, it can save you hundreds of thousands of dollars by having a little bit of knowledge before you do something like this. But I've had a lot of people talk about friends they had that went in and bought in KRAKEN on their initial raising, as if these people real lucky. They might not be real lucky. This is what you've got to look at. And it depends on what stage you bought at, too. That's the big key, because the people that got in KRAKEN at the very, very, very beginning, that might be different, okay? But the people who've gotten in the latter stages could get really screwed on it. And let me give you an example why. This is a chart of Coinbase right here. This was the last trading day, which was Friday, and now we're at Sunday, June the 9th, and it closed at $244.16 a share. It's down over $5, down over 5.0, down 5.03% for the day. All right, but let me show you the chart right here. Look at the little cursor here. I'm going to go. This was the initial public offering, which was right around, it was April the 13th, 2021. It was selling for $328.28 a share. Now, remember I told you before, if you look at the history of IPOs, initial public offerings, 60%, listen to this is important, 60% of IPOs fall below their public offering price within 6 months of going public. And Coinbase was no different. Look what happened here. Remember these figures, 322.75 a share is what it went public on, and this was April the 14th, 2021. Look what happened here. We're looking at April, May, June, July. We're only talking about 3 months later, okay? It drops from roughly 328 down to roughly April, May. Just 2 months later, it's down to 222. So it's already dropped, 30% roughly. I'm just giving you ballpark figures that it's dropped roughly, okay? And that's in that short time period. Now, what price did you get it at before it went public? That's the key right there. 30% is a lot that the stock dropped from the initial public offering price. But look what happened. This stock came back up, and it actually exceeded the 344 versus 328. It exceeded the public offering price, and this was in November. So we're looking at roughly May, June, July, August, September, October, November. So we're looking at within about 7 months, it exceeds the public offering price. But look what happens here. This is why you got to get a stock some time, especially if it's carrying a hefty valuation. In other words, the price earnings is very high. Look what happened here. This stock continued to drop all the way down. It finally bottomed out right around 33, I think $33 a share roughly, 32, yeah, $32 a share. But then it went nothing but north from there. And it went up around 6 times where it was at the bottom, okay? Now it's around 244.16 a share, but it still has not hit the public offering price. We're looking at roughly a year and a half later, and it still has not come back. Now, I do remember when it was down here at $33 a share, it was selling for 5 times earnings. And I actually considered, I said, this is incredibly cheap right here. I still remember that period. It's 5 times earnings. But the reason I didn't buy this stock, Coinbase's service is so friggin' bad. Nobody picks the phone up. You can't get anybody. I've talked to people that've lost money on there, clients that lost money that couldn't get it back. They couldn't get people on the phone, even when they lost money. And this was one of the biggest things I looked at was service. And I'll be honest with you, KRAKEN used to have really good service, real good phone service, but they've dropped off significantly too. They're better than Coinbase, but they're going through a lot of regulation investigations right now. For two of the ones they mentioned was selling securities. Now, whether they did or not, I'm just telling you these are allegations in the securities business. Okay, that was one that came up that they're looking into. The other one was doing things like commingling funds. That's big stuff there. Now, whether or not they're going to be found guilty of it, in other words, taking their own funds and mixing clients' funds. This is what happened with that crypto that went bankrupt in Bahamas. They were commingling funds, and you have to be really careful when companies start doing stuff like this, because what can happen if the regulators get in and this thing go bankrupt just because of everybody starts pulling their money out, and the company just can't keep up with the demand. This is a problem. So there's always this risk of not bringing enough business, but scooting around and doing the wrong thing. I mean, that can bring a company down right there. But the point I'm trying to make is the fact that sometimes getting at these pre-IPO prices, you think you're getting a deal, but look what's happened here with Coinbase. It dropped 90%. I mean, it dropped from this point here to where it went public down to around $32, $33 a share. That's 90%, over 90% it dropped, okay? Roughly from the high all the way to the low. And so the point I'm trying to make is, is this, should you really be going in before it goes public? I would tell you, it's 60% selling for below the market price within 6 months, the public offering price within 6 months, or when it went offering on the market, then probably I would wait. That's what I would do. But I'm going to show you another example right here. Let's look at Facebook. Here's one that's one of the biggest companies in the world now. I mean, this is, which is Meta. I mean, here's a chart right here that you really should look at. I mean, this Meta, which was Facebook back then, was selling for, when it went public, it was selling for around 500 times earnings. The valuations were through the roof. And you can see here, May the 18th, 2012 was about when it went public. It was selling for $38.23 a share. That was May the 18th, 2012. But look what happened. If you had just waited until after the stock went public, okay, and it bottomed, it started just instantly dropping. This is when a lot of institutional investors, I think, people would just maybe drop because the price was so high as far as the valuation goes. And you can see right here, it bottomed out right around August the 31st, 2012 at $18.06. So it dropped from 38 to 18. And we're looking at the months was only May. You're looking at May, June, July, August. 3 months later, this stock drops, almost in half. 3 months later of going public. This is one of the biggest companies in the world today. Now, if you look at the top, it's up 1,800. It's up 1,189.6. It's up 1,189.46% since it went public. And it's done nothing but go up from there. That was the bottom at around $18 a share, roughly. And then it's gone up all the way to where it's $492.96 a share today. But there's people that probably bought Facebook before it went public, okay, that if they had just waited and let it go public, and in that 6 month period, let it take that nosedive down to around $18 a share, you would have had to buy probably Facebook pretty early on, pre-IPO, okay, before it went public, to get a better deal than if you'd wait until it went public and dropped almost 50%. Again, it was 38. It dropped down to $18 a share. Okay, so it dropped actually more than 50%. Okay, so the point I'm trying to make is they're advertising now that Kraken is coming up with probably another chance where you can go in and buy the stock before it goes public. You can make that decision you want, but I'm going to tell you from past experiences, what I've seen, and Facebook is one of the biggest companies in the world today, and you see what happened. It dropped over half within just a few months of going public. Most cases, if you wait, okay, and don't take it from me, I'm just giving you facts, okay, you'll probably be better off if you're going to buy this. And again, get with your financial advisor. I'm not recommending this stock. I'm just telling you that if you're looking at buying it, get with your financial advisor. But in a lot of cases, you can buy at a lot cheaper price if you wait, let it go public, let the institutional investors, they'll try to make a quick profit, get out. You'll see the thing tank, more than likely. Some equities don't do this, but I'm giving you examples of two pretty big ones. Coinbase is one of the biggest in the industry now in crypto exchanges. Facebook's one of the biggest in the world. So I wouldn't be so trying to rush in and try to get in these private fundings before they go public. That's my saying on this. You make your own decision on it. Anyway, if you want to legally get around high income taxes or how to get a second passport as quick as 4 to 8 months, do 3 things. Hit the subscribe button at the right of your screen. You get new videos automatically as they come out. Number 2 is I would like to hear from you. If you got a question or comment, put it below and go to our website, www.citizenshipquickly.com, and just ask for some help. And I look forward to talking to you on the next video. Take care.